Good morning, traders. It is 8:01 a.m. Chicago time on Wednesday, the 10th of February, 2016. Thanks for joining me. It's another early nourishment for your trading mind session. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. Overall, the stance of the market as we stand, oil is down 0.32%. Gold is down 0.9%. Um, bonds are down 0.17%, and the 10 years are down 0.23%. The Bund's down negative 0.21%. The Nikkei took another hit today after the drop of 5.4%. The Nikkei finished down another 2.3%, just not looking good there. The Hang Seng again adding 55 basis points, up 0.55%. The Shanghai negative 0.61%, and the Japanese yen is almost flat at 16 plus 16 bips. The Eurozone FTSE's up 0.69. The CAC is roaring up at almost 2%. The DAX at 2%. U.S. equities are up 0.9%. The U.S. dollar index up 24 bips. The overall sentiment and stance of the market is that of higher risk appetite today. The key driver this morning is Yellen's testimony, the Humphrey Hawkins testimony to Congress. Yellen's main statement says that tightening financial conditions driven by falling stock prices, uncertainty over China, and global reassessment of credit risk could throw the U.S. economy off track from an otherwise solid course. This is basically her testimony, essentially saying that she and the rest of the committee are going to adapt to whatever market conditions are presented. Yellen said that there are good reasons to believe the United States will stay on a path of moderate growth that will allow the Fed to pursue gradual adjustments to monetary policy, and the emphasis is on gradual. But the reality is the market's looking at that and saying, okay, the Fed is seeing what we're seeing, and there are issues with growth. As we've witnessed over the last a couple weeks, the market is quite unsettled by what's going on in Asia, Greece, and so on. The U.S. dollar is near 3.5-month low. The U.S. dollar index is holding just above 96, its lowest level since late October. Recent volatility in global markets has pushed back expectations of additional Fed interest rate hikes, taking the steam out of the U.S. dollar index, which climbed 6% from mid-October to the end of January. That's a lot for a currency. $6 trillion worth of government debt has a negative yield. And other than that, there's really not much. Disney came out yesterday, and it absolutely crushed estimates. Came in at $1.63 a share, beating $1.45. Revenue of 15.2 topped the consensus estimate of 14.73 billion. Pretty strong stuff there. As far as what we've got for today, ahead of us, we have at 9:30 Central, 10:30 Eastern, we have the Department of Energy's U.S. gasoline inventories expected at plus 1 million, distillates at negative 1.6 million, crude oil inventories at plus 3.2 million, big numbers. And then at 1 o'clock Central, 2 Eastern, we have the U.S. monthly budget statement expecting 42.5. Again, Yellen's still going to be appearing before the House Financial Services panel at 9 Central, 10 Eastern. The text from her prepared remarks has been released. Again, 9 Central, 10 Eastern, very, very important. And then we have Fed Speaker Williams at 12:30 Central, 1 Eastern. After the market, we're looking for earnings from Twitter, expecting 12 cents, Tesla expecting 8 cents, and Cisco expecting 54 cents. That's how things are shaping up, have shaped up overnight, and the way things are looking for the day on the news front. Let's take a quick look here and see where we stand technically. So yesterday, I did speak about one of the key elements of yesterday. If you had watched the Trader Bite, is the fact that we are opening in value and in range, and the expectation was for some pretty strong rotations. Uh, um, Pretty strong rotations on the open. The market is likely to react violently to where we are. We have a gap above us from 65.75 up to 55. The mid of the gap is about 60.375. And what was expected yesterday is for the market to be responsive but very choppy. And the key trade would have been a step down to 1075, which did not take place. The second hypothesis is for it to chop around and then start to drift up towards that 65, the key 64-65 area. It got to 63.75, very strong resistance there on the first touch. That was the expectation. I had talked about this several times. We have tested the 64-65 low multiple times on a daily chart. I'm talking day session only, pit session only, and the expectation is a virgin test of that level is likely to see a rotation down. We got that. This rotation was 19.5 points. 19.5 points yesterday. The market ended up the ES ended up having a normal variation day to the upside, range extension to the upside, closing right in line with the point of control. Most of the session, the point of control was in line from day to day with higher low, higher high marked earlier in the session. So the market was accepting this price pretty well. It shifted this point of control later in the day and held a higher point of control with a higher high, higher low. This is signifying that value is starting to find a good bid. The market is appears to have done its job of finding buyers. Tough trading yesterday, to be honest. We had a beautiful setup for the IB low. The probability of breaking the IB low or IB high on the day is around 97%. And when the market broke through, had this deep pullback and then broke through again, the trade was to sell for a tag of at least 25.75, and it pushed by a tick, and it just could not get there. 29.50, and then from there it just started to rise pretty strong. So overall, the rotation up from 29.50 was about 34 points. A pretty decent rotation up. The day before we had a 33.25 point from here to here, and here we have 34 points from there to there. The market is finding buyers in these areas and is attempting to hold above this low volume node on the composite. As it succeeds at doing that, then we start looking back. We start switching back to the prior balance, and the prior balance goes all the way back to here, all the way through. We're back into the 1890 becomes the target again. 1890 is the next likely area to test. So this morning, the expectation, we are teetering in and out of range. We are above value. This morning, the expectation is for responsive selling back into the 1848. We're looking for the market to close the point of control, close the gap, which is around 1848 quarter. And then I expect it to chop around. The key price to watch is this low volume node separating the upper and lower distribution. Let me extend this chart a little bit so you can see what that looks like. So yesterday's profile is a double distribution profile. Looks like that. And this price here is very important. That price is the 44.50. and I'm expecting this to respond downwards towards 1848. I expect it to chop around as long as it does not challenge and hold below the 4450. Then I'm going to be looking bullish back into the 1890 area, with 1865 still presenting, even though we've taken it out overnight. 1865 still presenting some resistance on day session. We still have not fully tested that price. What does it mean to break and hold? A lot of people say that. Um, to me, it is not a time-based thing. Some people say it's got to have a 5-minute bar closing below it, or a 15-minute bar closing below it. I don't believe in time as a factor in trading, except for the open close and the time of news releases. The market doesn't really care about time, in my opinion. It cares about volume and price the most. That's what determines what happens next. When I say it falls and holds, what I'm basically describing is the ability of the market to drop and then pull back and then fail below that level. In other words, if it pokes through and then goes up, it's not really failing and holding. It is just testing. It's a quick probe and a bounce, and that's the normal behavior at LVN on the first touch. But if it breaks through, pulls back, and then that level becomes an area that it's paying attention to, and it starts to take out that most recent low, then now I'm looking for a retest of that 29 below down here, and then again 1075 gets into play over today or the next session. So that's how things are shaping up. I'm going to keep this short and sweet. Again, the primary hypothesis, responsive down to 1848, chop around, and then I'm expecting it to find buyers as it digs deeper for an immediate test of 1865. I expect it to fight 1865 for a little bit. If it breaks through, then the overall target's 1890 above over today or the next session. If it digs into 1848, 1890 becomes a lower probability, because that puts that about 40 points away, and the statistics do not support 40 points as a range on the upside, and we can see that very quickly in our daily chart. So here are the ranges. Here's the daily range, and if you look at the normal range is about 23 points currently, and the second standard deviation, which is 95.45% of the time, the market's within the 43 points, and it's done it a few times. It's done it on the sell side. On the buy side, it has not been as effective at pushing above the second standard deviation, except for that Wednesday, the 21st, where we pushed 65 points. But other than that, 1890 is unlikely today. The only way 1890 becomes likely is if it starts from up here and we have what's called an open test drive type of behavior. Yesterday's open, this bar here, was an open test drive, and as soon as we see an open test drive, it means that there are higher time frames in control and that we should not trade against it. In other words, stay off of shorts on the open, let it settle, let it test a few things, and then look to go short if that's what your plan calls for. If today it opens and it drives up, then it's able to get the 1890, but if it responds back down to 1848, chops around and starts moving up, unless there's news, it's not likely to get to 1890, but 1865 is a high probability today, higher than the probability of a drop. The overall condition over the last 2 days is, again, we have gapped down into balance. The market has been very, very unsettled. It has traded. It has traded in a way that where we gap and then just settle down. We don't fill these gaps right away. So right now you have a two-prong MC. Again, 1848 being the initial and most important test. Below there, 45. 44, 50, 45, and then if it gets beneath there, then we're looking for this 39.50, and then below that It's the overnight low, and then 1075 gets into play again. That's about 40 points away, and that is attainable. I know it's a lot of information. Just sit tight, keep watching, and hopefully bit by bit you'll pick up the pieces as we go along. Things get more and more clear the more you pay attention. Good luck to you, and I'll catch you tomorrow. Take care.